Well, they're $100,000 per year. So the whole idea is no more will these big tech companies or other big companies train foreign workers. They have to pay the government $100,000, then they have to pay the employee. So it's just not economic. Train Americans, stop bringing in people to take our jobs.
You're very close to the technology CEOs. Are they concerned about that?
Everyone's going to be happy, and we're going to be able to keep people in our country that are going to be very productive people. And in many cases, these companies are going to pay a lot of money for that, and they're very happy about it.
President Trump says U.S. tech giants will happily pay the staggering $100,000 annual fee for H1B visas. But the new policy is already causing chaos and confusion at firms like Amazon and Microsoft, which rely heavily on foreign talent. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Shares of Indian tech companies are in focus as we count down to the open of the trading in Mumbai, with Trump's new visa fee threatening to upend their business model. We'll speak with C P Gurnani, the former CEO and MD of Tech Mahindra, about how this may impact the industry.
And I'm Menaka Doshi at the JPMorgan India conference, talking to senior bank leaders about the impact of that H1B visa rule change and also the booming IPO market in this country.
Our top story today, President Trump taking his most extensive step yet toward overhauling the U.S. legal migration system. He has announced a $100,000 application fee for the widely used H-1B visa, triggering concern from corporate America. The move is expected to drastically increase the cost of visas heavily coveted by some of America's largest companies seeking to bring in skilled workers from abroad. Tech firms have relied on H-1Bs for years and could be the biggest losers under the new rules. Although the White House has clarified that the fee only affects new visas, not renewals or current visa holders, it's also seen upending the business model of India's tech industry and the job prospects for Indian workers, who are by far the largest beneficiaries of H-1Bs. Trump's new visa rules are looming large over JPMorgan's 10th annual India conference. Bloomberg's Menaka Doshi joins us live from the event in Mumbai. And Menaka, for the Indian tech sector in particular, the sharp hike in H-1B fee came as a bolt from the blue. What a blow.
Well, absolutely has, and it is going to tell on the margins of Indian IT companies, and we'll only know the exact details over the months to come, because there was some confusion over the weekend on whether it applied to existing H-1B visas or new ones. We now know it's only new ones, and that gives companies a chance to moderate, how many people they seek to bring on shore through H-1B visas. So it's tough to tell the exact or precise financial impact at this point in time, but it will tell on the profit of Indian IT companies, and it will also tell on the Indian student ecosystem has.
We know that this is being discussed at the conference. You spoke earlier with JPMorgan APEC CEO Leonard. What did he have to say?
Well, he said it's going to be a $14 billion tax bill for a large number of American and Indian companies and other companies across the world that hire H-1B visa users. Well, unfortunately, we were trying to play that comment from short Leonard for you, but maybe we'll come back to it later in the show. Has he also expressed concern about what this means for the student ecosystem? I asked him whether it will mean more offshoring for companies like JPMorgan. JPMorgan has a 55,000 employee global capability center here in India, and if they decide to hire fewer Indians on H1B visas in the US, will it mean more jobs here for GCCs, which is one big question that everyone's trying to grapple with through the course of the weekend. And he said it was just too early to tell on what the precise impact will be. But there is expectation that the job losses that we might see on account of this H1B visa rule change might also result in a considerable amount of offshoring and be compensated by an increase in the number of people here in GCCs in India.
Monica, you got to wonder the kind of challenge that Prime Minister Modi is facing right now. I mean, this comes on the back of the 50% tariffs. Might there be implications on jobs, on the economy, on growth?
Yes, it is. And I think that's going to be one of the key talking points here at the JPMorgan, India conference has. On the one hand, you've had a tumultuous tariff year. You now have this H1B visa drama over the course of the weekend. But on the other hand, you have significantly strong underlying GDP growth. The last data point was 7.8%. And starting today, I think today is the 22nd, right? Starting today, we're seeing a cut in India's consumption tax. It's an across-the-board cut, and it's expected to spur consumption in everything from household items to electronics to apparel. So, it's tough to tell what the net impact of all of this will be, but 2025 has definitely kept everyone in this economy on their toes.
And of course, we'll be getting perspective from JPMorgan there, Bloomberg's Monica Doshi at JPMorgan's 10th annual India conference in Mumbai. Also ahead on Insight, we'll speak with AlonOS co-founder and vice chair C P Gurnani. He's the former CEO of Indian IT giant Tech Mahindra. His reaction to Trump's immigration rules just ahead. Meanwhile, another big story we're following. President Trump says he'll meet with Xi Jinping next month on the sidelines of the APEC summit in South Korea. It follows their Friday phone call, which Trump says delivered progress toward finalizing a deal over TikTok. Let's bring in our Chief North Asia correspondent, Stephen Angle. Steve, quite a significant progress. What more do we know?
Yeah, it's significant progress, according to the White House and the Trump administration. The Chinese readout of their phone call a little less glowing as far as progress towards a deal on TikTok. It looks like they have moved that ball forward from that framework agreement that Scott Bessent had in Madrid with his counterpart, He Lifeng. But again, it's not definite yet. In fact, the deadline for divestiture of the U.S. app of TikTok by ByteDance for the U.S. operations has been extended until December 16th. So we still have a few more months to get a final details of the deal if it does come to fruition. What we do know right now is mostly from Trump and his spokesperson, Ms. Leavitt, who essentially say the 6 of the 7 board members will be Americans. The algorithms will stay U.S. controlled. Oracle, Andreessen Horowitz, Silvergate Management will be that consortium that will buy the majority of the U.S. app. Donald Trump says there will be very tight control over the app and Americans' data. So there's still a lot of issues, in particular over the algorithm. That before what we've heard has been a non-bargaining chip really for the Chinese. We don't know exactly how or why Xi Jinping or the Chinese side is willing to make those exceptions, unless, of course, it helps foster progress on the more contentious, more sizable issues of national importance and strategic importance for the Chinese, such as, the trade tariffs, such as those export controls on advanced technology, a lot more difficult issues that need to be resolved or at least smoothed over.
So possibly a step forward, Steve, a high-level U.S. congressional delegation now in Beijing. Realistically, what can be expected?
Well, I think what Li Qiang, the premier of China, had to say is probably pretty correct, in that this is an ice-breaking trip to help get the U.S.-China relationship on a steadier footing, if you will. That basically House delegation is the first time a senior House delegation has gone to China since 2019. You just saw there the head of that delegation, the Democrat and former House Armed Services Committee Chair Adam Smith. He says the two nations need to peacefully coexist. He did, however, express a deep concern that the two militaries don't communicate more, but that's been a reality for quite some time now. But again, an ice-breaking trip, and they were greeted on the first day of arrival in the Great Hall of the People, as you see here. So this perhaps is also paving the way for Donald Trump to make that trip to China, as Trump says. Yes, he'll meet Xi Jinping on the sidelines of APEC at the end of next month in South Korea, but he plans, if all works out, to go to China perhaps in the beginning part of 2026.
Steve, thank you so much for that. Chief North Asia correspondent Stephen Angle in Hong Kong. Let's get insights now with Dennis Wilder, Senior Fellow at the Initiative for U.S.-China Dialogue on Global Issues. He previously served as the U.S. National Security Council's Director for China. Dennis, good to have you with us. I mean, what's your take on these high-level diplomatic talks? We know that the U.S. has indicated it's a step forward, it's a huge progress, but we're not hearing anything from China.
Well, thank you. It's good to be with you. I think there are several things I would point out. Number one, they do seem to be moving closer to the deal on TikTok. There may be issues on the American side. President Trump said that the Murdoch family, Fox Corporation, may be involved now, which is a new name. The Chinese International Television Service said today there was a broad consensus on a deal. So I don't think we're there yet. I think we need the signing ceremony, obviously. There are tough issues to be dealt with, particularly about the algorithm and who will control that. The White House says the United States will control that, but that remains to be seen. I think that President Trump really wanted to go to Beijing before the APEC summit, but I think Secretary Bessent convinced him that there wasn't enough progress yet for the big, beautiful summit in Beijing. And so I think that the president backed away from that. There are the issues of rare earths, there are issue of fentanyl, and China not moving enough from the U.S. perspective on controlling fentanyl precursors coming into the United States. From the Chinese side, obviously, there's the issue of high-tech exports from the United States and the restrictions that continue to be placed on them. So there's a lot still in the air, a lot to be negotiated, and the pressure will be on Secretary Bessent to see what he can get out of the Chinese.
Right. Dennis, help us understand, why do you think China is willing to give up TikTok now? It fought for 5 years, determined not to lose this, and now it just looks like TikTok could be the low-hanging fruit.
Well, remember that President Trump has basically defied Congress on this issue by continuing to give extensions. At some point here, the president will have to yield to the law and ban TikTok. I don't think ByteDance, I don't think the Chinese want that to happen. And so I think the Chinese know that they need to give on that issue. I would also point out that on other issues, the president has been on a trajectory that really is against the American hawks. For example, he has somewhat downgraded the relationship with Taiwan, not allowing the defense minister to come to Washington, not allowing Lai Ching-te to visit New York. They made a low-level meeting with Taiwan in Alaska. The president has talked about allowing 600,000 Chinese students in the United States. So in many areas, the president is moving in the Chinese direction. And perhaps they feel with all these other things, we also saw the NVIDIA chip decision that again goes against the hawkish views within his administration. So I think the Chinese want to continue to encourage the president in this direction, and maybe they feel TikTok is a reasonable way to improve the atmosphere.
So fair to say that as far as the U.S. is concerned, it is moving, it's advancing its strategic goals when it comes to its relations with China.
It is, but there are big issues. The rare earths issue is a huge one for U.S. defense industries. If China does not open up this area, the halt to the production of defense equipment, such as F-35 aircrafts, could occur relatively soon. So we have leverage on the American side, but the Chinese also have considerable leverage.
We talked earlier about how Taiwanese president's trip to the U.S. was aborted, and some say it has to do with how Trump wants to advance the relationship and the talks with China. How might its other allies be looking at this? I mean, the fact that Trump is willing to make that concession to advance, I guess, the agenda of the U.S.
Well, I think in Taipei, there is a great deal of concern because one thing I haven't mentioned yet is the fact that apparently Trump has delayed a $400 billion military sale to Taiwan. Now, that doesn't mean the sale is off, but it may be that President Trump will delay such a deal until after the summit in Beijing. This will worry the allies in Taiwan greatly because they have been fearful that Trump, because of his strong interest in the economic relationship with China, was willing to concede on some issues with Taipei. And they're worried that he might change language. For example, Trump could decide to say that we oppose Taiwan independence. The position of the United States has always been that we do not support Taiwan independence. It sounds like a small change, but to the Chinese, it would be a huge change. And certainly to Taipei, it would be a huge change.
When it comes to the sale of TikTok, do you think the U.S. is setting a precedent here? What should we be looking out for? What's the key takeaway from that?
Well, the key takeaway, frankly, is that we have never actually allowed a foreign government, foreign entity to control the news media in the United States. In many ways, now that 180 million Americans at their height get their news basically from TikTok, this was allowing a foreign country to control news media. Remember that Rupert Murdoch had to become an American citizen before he could buy Fox News. So I think the important answer here is that the United States is continuing with a policy that has had for many years, that the major news outlets in the United States have to be American-owned.
From where you're seated, how much risk is there of a strategic miscommunication, miscalculation? What advice would you give to U.S. policymakers at this stage as they negotiate with China?
I think there are many ways in which the situation could spin out and become much more volatile. Certainly, I worry about accidents over the South China Sea between American fighter jets and Chinese fighter jets, or an incident at sea like we have seen with the Philippines and the Chinese Navy and Coast Guard. There's an awful lot of activity militarily. As you heard, the American delegation that went to Beijing was stressing that we need much more contact between our militaries. And I think that is a very large and concerning issue.
And in terms of China's posturing, have you seen any changes in the last 12 to 24 months? Has it taken a more, I guess, aggressive approach, or it's been status quo?
I think the aggression has really been both with the Philippines, where it has been much more aggressive. And as I said, they have collided with Philippine ships. They have used water cannons against Philippine ships, and also around Taiwan. Your audience may not understand, but every single day, Taiwan is feeling the effect of Chinese fighters and Chinese Navy. The Chinese fighters come up around the island. This is an attempt at intimidation. It's an attempt to sap the morale of the people of Taiwan. And many on Taiwan worry that it is the prelude to something more serious. So there are big issues. There are big concerns about the direction of Chinese policy.
And how might this play out?
in the military sector, you could see the Chinese at some point getting tired of the situation and losing their patience with Taiwan. I'm not predicting it, but Xi Jinping has said to his forces to be ready by 2027 for some sort of action against Taiwan. You could see many different kinds of coercion, quarantines of the ports, blockades of the ports. I don't think an invasion makes a lot of sense because it is a very risky military action. But there are certainly many actions the Chinese could take to put more pressure militarily on Taiwan.
So, Dennis, lots of issues on the table. I'm just wondering, for that Xi-Trump summit expected in October on the sidelines of APEC, what can be delivered? Would rare earths be one of the deliverables for that summit in particular?
I think it could be. I think one thing, of course, the Chinese could do is buy Boeings, buy soybeans, agree to reduce the trade surplus with the United States in those ways. I think those things are possible. I think that the Chinese could offer up more assistance on fentanyl. I've felt they have held this back as a card for some time. But I think the key point on the Chinese side is they're going to want to hear from President Trump that he is ready to pull back on all these high-tech restrictions on China. That will be a big debate within the Trump administration. The hawks will not like that. But as I said earlier, on NVIDIA, he reversed the decision on H1B chips. I think he could decide that we don't need to be as careful about technology as some would like him to be.
And Dennis, thank you so much for your time today. Dennis Wilder, Senior Fellow at the Initiative for U.S.-China Dialogue on Global Issues. Still ahead this hour, an exclusive interview with JPMorgan's Global Head of Advisory and M&A, who joins us live from the bank's 10th Annual India Conference. Plus, Indian IT industry veteran C P Gurnani assesses the impact of President Trump's $100,000 H1B visa fee. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Here are some of the stories we're following. President Trump says a U.S. government shutdown is likely, citing a stalemate between his party and the Democrats. Senate Democrats and Republicans each blocked the other party's rival plans to provide temporary funding, moving closer to a shutdown on October 1st. Senate Democratic leader Chuck Schumer is urging President Trump to negotiate.
We are hoping that he will negotiate with us.
And if he doesn't?
So far, he hasn't. And we've had two bills in the House and Senate, and neither of them have passed. Our Democrats are firm. We need to get something done to relieve the distress the American people are in.
President Trump has renewed his call for European countries to stop buying oil from Russia, a demand he's linked to pressurizing Vladimir Putin to halt the war in Ukraine. Russian forces have stepped up their attacks since the two leaders met last month in Alaska. Sources close to the Kremlin say Putin thinks military escalation is the best way to force Ukraine into talks on his terms, with Trump unlikely to act. Coming up, JPMorgan's Global Head of Advisory joins us exclusively with her outlook on M&As and where she sees the next wave of deal-making. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight, and here's a quick look at where markets stand. And At about 11:30 a.m. here in the Lion City, we're seeing gains for the MSCI APEC index up by 0.4%. Japan, by the way, leading the pack after the central bank eased concerns over plans to offload its massive exchange-traded fund holdings. Of course, we've seen developments in terms of U.S.-China relations as well, with Donald Trump touting progress on related issues and said he would meet Xi Jinping, improving sentiment and reinforcing the expectation of continued trade ceasefire between the U.S. as well as China. CSI 300 in positive territory in terms of the USD versus the yuan, currently at 711.43. We're seeing the Chinese currency up about 0.1%. Now, President Trump's H1B visa fee has jolted companies that have long relied on the program to bring in global talent, especially in a tech-heavy economy that relies on trained computer programmers, data analysts, and engineers. Let's get back to Manika Doshi at JPMorgan's India conference. Manika, what are you hearing on the ground from the bank, which hires a lot of foreign talent on that H1B visa?
It's nice to connect again. You know, it's been a dramatic weekend, and I was talking to JPMorgan's top leadership exactly about the impact that this new H1B visa rule will have on hiring in the U.S. and whether it will result in more offshoring, which can have a counter impact here in India. And so this is what the APEC CEO of JPMorgan told me about the total cost in terms of this H1B visa additional fee that will have to pay.
If the companies in America continue to hire as many students or workers as they did before, it will be about a $14 billion, essentially, tax to companies. And that will affect U.S. companies, will also affect Indian companies that employ a lot of people in the U.S.
So $14 billion is not an insignificant amount, Haslinda, and some part of that will fall on the financial numbers of Indian IT companies. It will have implications for remittances back in India. It will also impact the student ecosystem because a significant number of Indian students looking to study abroad tend to go to the U.S. with the hope that they will be able to move there with a job eventually. And I think all of those dreams now are going through readjustments.
Dreams may get dashed, and how about the economy, the broader outlook for the Indian economy?
That's also going to be a key point of conversation here at the JPMorgan India conference. And I think, like we discussed earlier on in the show, there are strong points underlying the economy despite the tariff and now H1B visa headwinds that we've seen through the course of the year. We've had good GDP growth. We are looking forward to maybe a bump up in consumption on account of a cut in consumption tax that goes into effect today. And then we've had an IPO boom. And in fact, to talk about that, I am joined by Anu Aiyengar, the Global Head of Advisory and M&A at JPMorgan. And Anu, I want to talk to you about the IPO boom, whether you see that as being sustainable. And next year, we're going to see two behemoths come to the market, one of them being Reliance Jio and NSE. So are your clients trying to get their offers done in good time before those two come upon us?
Yeah, it's really exciting time to be here, because the number of IPOs that we are preparing to do in this market is higher than any single market that we have kind of all our people focused on trying to bring companies to the market here. And there's a lot of good reasons for that. You talked about kind of the underlying growth in the economy. But beyond that, when you look at the ability in this market for whether that is private equity firms or strategic to cycle through the capital, because people have been able to raise money on the India story. Some of the new funds that private equities have raised have been on the back of, I'm going to invest money in India and Japan. And they're able to show that the companies they have here, they can exit through the IPO market. This cycle that private equity kind of functions on, this hasn't worked as effectively in many of the other markets, but in the Indian market, it's working really well. And that has been a big attraction in terms of being able to raise capital on the back of the India story.
So last year we did over $20 billion in offerings. Do you expect that to be the number this year? Do you think India will become, on a regular basis, a $20 billion IPO market?
It could be much higher than that. I wouldn't. I would be more ambitious than that, because as you have more amount of capital that is flowing in, more trading, more number of investors, and the size of the capital markets in India is growing, you do have the ability, as the market matures, for this size of how many companies are public, the overall valuations, market cap of the Indian exchanges, to go higher and higher. So I wouldn't put a limit based on what it is last year, because this is a growing economy where there is still several private companies that exist, as well as several private companies which are getting formed every day. And certainly in some sectors, whether that is technology, energy transition, AI, areas like that, there's a lot of innovation that happens in this economy as well. So we are very bullish on our outlook.
Are you equally bullish on M&A and private equity? Because that's been middling through the first half of this year, and it's not clear post the tariff announcements on India, whether the mood has sort of sombered even further.
So look, this whole year has been about navigating uncertainty. The news cycle that happens, and ever-changing, right? Because if you did tariff model in the middle of April, that model kind of was extinct a month later, and then again. And so you have to constantly not just manage for today, but manage for the future. Because on the other side, you look at the cash flow generation of companies, you look at investments and the connection between CapEx and cash flow, those are all pretty attractive because people are continuing to invest, they're continuing to generate cash, and that bodes for a healthy economy. Having said that, there is always caution when there is uncertainty. M&A is a confidence game. Right. And so when you have this level of uncertainty, then you need to think through that, analyze all the scenarios, and you're just a little bit more cautious in activity. Despite that, Asian M&A volumes year to date is up 58%, right. Despite that. Globally, it's about 28% or so up. And Asia has been north of that because some of the other parts of the world, it hasn't been as much of an increase. And that increase has been primarily driven by Japan, but India comes kind of right after that. So I wouldn't say that the Indian M&A levels are as much as it can be, because you're right, there are some headwinds. But if you can work through those headwinds and have higher certainty, I think there's upside to those volumes as well.
All right. Speaking of global trends, I think AI has been a big deal generator, yes. But so is nationalism. And, marrying the two is that Intel deal, where we saw NVIDIA sort of pick up a 5% stake or invest $5 billion. I'm just curious, what do you make of that particular deal? But also, what do you make of these trends? And how does this set up 2026 for us?
Yeah, so 25 has been surprisingly robust for a year with this much uncertainty. And that's because while you have this uncertainty, you also have the need to get AI capability. So where is it that you've seen the most amount of activity is companies saying, do I try and come up with my own AI solution, or do I buy a company before it disrupts me, or while it is disrupting me, or after it has disrupted me, right? So there's a range of what it is that you end up paying for somebody depending upon where you are in the nature of the competitive environment. As well as the nationalism trend you talked about, I would describe that a bit more as navigating the regulatory landscape across the globe.
Okay.
Because you need to get regulatory approvals for most of your deals in almost every jurisdiction today. And that is not specific just to AI. So on the AI side, AI, supply chain, overall tech capabilities, nearshoring, all of these have been driving M&A activity. And a very important one, the need for scale.
Right.
In most markets, you see an amazing correlation between scale and valuation. And when volatility goes up, people feel that larger companies are able to navigate that better because you have more sources of capital. Right. You can do portfolio rebalancing. And you've seen a lot of that happen as well with international companies with their Indian assets. You see a lot of portfolio rebalancing happening. Some people investing more, some people monetizing some. Right. And the flexibility to do that comes from being global and having scale.
All right, Anu, you've set us up for 2026. Thank you very much for your time here, and have a great conference. And with that, Has, it's back to you.
Bloomberg's Manika Doshi there, and JPMorgan Global Head of Advisory and M&A, Anu Aiyengar. Thank you so much for that. We're counting down to the India Open. It will start kicking off in about 6 minutes from here. Let's take a look at how those big Indian tech stocks are faring in pre-market. They are under a lot of pressure on the back of plans to impose that $100,000 fee for H1B visas. The Sensex overall also pointing to a lower open, down 0.6 to 1%. And Tata Consultancy among the biggest losers here. Of course, it is one of the companies that relies a lot on those H1B visas, along with Infosys, currently down by about 4% as we speak. Tech Mahindra, though, unchanged at 1553. Still to come, AlonOS co-founder and vice chair CP Gurnani weighs in on the new $100,000 H1B visa fee and its impact on the IT industry and workforce. Keep it here with us. This is Bloomberg. Welcome back. Here's a look at Indian IT firms as we count down to the Indian Open momentarily. We're seeing those tech companies under a lot of pressure. Infosys down about 3.7%. Tata Consultancy also under pressure. The H1B visa fee hike comes with India's Commerce and Industry Minister set to visit the U.S., of course, today in the hope of getting what he calls a mutually beneficial trade deal. Meanwhile, the sticker shock Trump delivered on visas risks disrupting Indian tech firms' U.S. projects and upending their traditional business models. Bloomberg South Asia tech reporter Sankap Partial is with us. Sankap, put this in perspective for us. It must have come as a huge surprise to India.
Yeah, hi, Has. I mean, this is not good news for Indian IT companies. They have long depended on the H1B visas to go to US, to send engineers and developers to work on client sites. So this is definitely not a good sign. But they've also reduced their reliance over the years. So markets will react badly today. But I think in the long run, the story of Indian IT will still remain intact. There are other challenges, though.
What are some of these challenges? And as much as we talk about how India has relied less on the H1B visa, it still accounts for 70% of all the visas issued.
Yes, those are Indian-born citizens that account for about 70% of these visas. But if you look at the top 7 Indian IT companies, they account for about 5.2% of all the visas issued last year for initial employment. I'm talking about the US fiscal year that ended in September. TCS actually got about 2,500, just over 2,500 visas. And Infosys got about 2,500 visas and TCS about 1,500 visas. That's about 50% less in 2015. So they have come down by about 50%. But these visas are still very important because they help IT companies maintain key client relationships, help their engineers and developers work on sensitive projects like finance and banking projects. And it's really, really important for some of these companies to have connect with clients at the site. The other challenge is obviously AI and that more global capability centers, or the so-called GCCs, are opening in India. These GCCs, owned by the companies themselves, are taking work away from IT companies.
Sankap, thanks so much for that. Bloomberg, Sankap Partial there. Let's get perspective from CP Gurnani, co-founder and vice chair of AI firm AlonOS. He's also former MD and CEO at IT services giant Tech Mahindra. CP, good to have you with us. First off, were you surprised?
Haslinda, yes, I was surprised, and it took a long time to sink in that an average salary of 75K of a software engineer, how would anybody, take a hit of additional 100K, and whom does this benefit, and why would somebody not understand that there is a shortage of STEM skilled talent, and when we send people on H1B, we are only helping America, and we are making American companies more competitive. They create more value. But the other way of looking at it, and I was listening into Sankalp, and I just want to remind him, is that 2 years of COVID, we delivered flawlessly. Number two, Indian companies have reduced their H1B dependence by almost 60%. Number third is, even to deliver complex banking and insurance projects, there is enough talent pool available locally. That means people who went on H1B have now become green card or have now become citizens, and that talent is available so that I can deliver all complex projects. So in a short run, which means next 12 months, I think there is a shock, but I would not think that it will disrupt any of our customer deliveries. And
but CP, this must still be a big blow to tech companies like Infosys, like TCS. They do rely on the H1B visa in a big way, sending their engineers, programmers, and so on and so forth to the U.S. in particular.
Haslinda, no, that is exactly the point I'm trying to make, that the new visas being applied for the size of those companies, when you have 400,000 people and you're talking about sending maybe 7,000 people, you're not dependent on those 7,000 people. And if you do not get, I'm assuming that the visas being given in a new, as per the new act, we get 0 visas. I think that will not impact any of the business plans of any of the larger companies, whether it is called Infosys, Tata Consultancy, or Tech Mahindra, because they have built-in resilience and they can deliver with 0 H1B applications.
Are you then saying there is no need for Indian tech companies to rethink their business model?
It's already happening, and I think, Haslinda, we pointed out earlier also, number one is the growth of GCCs, the Global Capability Centers in India. Number two is the company where I am the founder, AlonOS. We deliver projects by hybrid, that means artificial intelligence tools and human engineering. Number third is many of the Indian companies are now getting into products and platforms. Number fourth, you see a lot of forays in deep tech. You also heard Prime Minister Modi running a campaign on self-reliance. So the business model and the global delivery models are changing, and we live in a very dynamic world.
Do you see the tech companies redirecting Indian tech talent to back home or markets which are cheaper now?
I mean, I think their focus on US will remain. They will try and figure out a method of delivering value to the US customers. For Indian companies, Europe has always been a bigger market. Tech Mahindra has always had 25% of their market from the emerging markets. And I think some of this equation might change. As I said, in Tech Mahindra, I had 50. When I was there, it was 50% US, 25% Europe, and 25% emerging markets. Now, that equation might change slightly, or other companies which had 70% US may choose to repurpose themselves in the emerging market just to balance the risk management portfolio or to balance their dependence on only one market.
CP, how might the Modi government be looking at this latest development? Will there be greater incentive for them to implement policies, initiatives to develop India's own Silicon Valley?
I think Modi administration has been very clear that they want India to start delivering from chips to ships. I mean, that's Prime Minister Modi's own statement. which fundamentally says is that he wants the country to be self-reliant, and he obviously has been watching the waves for the past 9 months, that those waves are choppy and their direction could be sometimes adversarial. So I think India has started preparing. Will it be prepared today or tomorrow? I would not know, because I'm not definitely close to the policymakers. Number two is, I also believe that we are discussing trade, and trade negotiations never end. Right now, we have our External Affairs Minister from India and the Honorable Commerce Minister of India, Piyush Goyal, in US as we talk today, and I'm sure they've gone there to work out the best deal possible, a win-win for both US and India. I remain very optimistic.
CP, we're getting reports about how the H1B visa fee has caused a lot of confusion and chaos, and you can only imagine that a lot of the Indian talent might be heading back home. Is India able to absorb the talent that's coming back?
I mean, to me today it is a theoretical question, because I think it's the same way when we heard this on Friday night, Saturday morning, people said, oh, everybody needs to head back to US. So there was a war for the airline seats for flights traveling into US. Then we heard there is a clarification, you don't need to panic, you don't need to come. Similarly, I can only tell you is that, yes, I've received 5 phone calls, but it is not 50, it is not 500, where people have asked what kind of opportunities are there for research, what kind of opportunities for deep tech, and I've been very welcoming them.
Will it slow down the brain drain?
I didn't get that question.
Will the visa slow down the brain drain in India?
I personally think it will be a good sign. I am on the board of 2 universities. One is called Mahindra University in Hyderabad, and one is in Plaksha University, which is near Chandigarh in India. Both the universities have seen a lot more people who would have otherwise gone for their undergrad or postgraduate studies or doctorate studies to US, now applying to us in these 2 universities. So that clearly shows
CP?
that India is gaining.
CP, we got to leave it there. Thank you for joining us. CP Gurnani, co-founder and vice chair of AlonOS. Just breaking news right here. Pfizer nearing a potential $7.3 billion takeover of Metsera, and that's according to FT. Pfizer closing in on a potential $7.3 billion takeover of anti-obesity drug developer Metsera. This would mark the U.S. Pharmaceutical company's first big deal in 2 years. And that is it for Insight. Keep it here with us. This is Bloomberg.